It really looks like a mirror picture of yesterday, where we opened higher today, up by about 0.5%, down over 1% as we head into the afternoon. It appears this market's still very nervous.
Yes, well, we're taking a lot of our lead from the US market, and yesterday when we closed, the US market was down 1.3%. So when we opened today, it had recovered to only being 0.3% down. So I think initially we had a bit of buying coming in, people just taking profits and some shorts, so we had some short covering coming in. But then the selling came through again in this afternoon, and just the contagion in Europe and the debt crisis in Europe is putting pressure on our market, as well as high inflation coming through in China, looking like they might have to increase interest rates there.
And of course, while the focus has been on Portugal and also Spain, it looks like this could even spread further into other Eurozone countries, such as Belgium, such as Italy, and those would be a bit more significant, wouldn't they?
Yes, well, Italy is a G7 country and a very large economy, and it will be very worrying if this contagion does slip into Italy as well. It will be very worrying for the Eurozone as a whole. We've got two bond issues out this week. Portugal's going to the market for cash, and so is Spain. Portugal today. If there's a very good uptake of those bonds, I think that this crisis will settle slightly, and we'll see some buying coming back into the market. Conversely, obviously, if there's not a lot of uptake on those bonds for Portugal and Spain, it could be very worrying. We could see a very big sell-off in markets around the world.
And of course, as you mentioned, the focus also shifting to China again this week. We've got PMI numbers coming out, some more manufacturing data, and that there is some concern that the Chinese central bank could raise interest rates following that announcement. And of course, we have seen those reserve requirements being pushed up as well, so putting a bit of pressure on the markets also.
Yes, I think currently they've got a bit of a liquidity crisis, and that comes from the increase in that reserve ratio of 50 basis points a week or so ago. And you can just see that they are trying to slow that economy down, but the more they're doing that, there's still inflation coming through and a lot of growth coming through. So they are trying to stem that. And if the PPI comes out at a very high number, they have got leeway to start to increase interest rates, which obviously will increase the strength of that Chinese currency, which in some respects is good for the world economy. But really what it's going to do is slow down imports.
And of course, that would affect commodity prices and affect our market quite severely, wouldn't it, Rob?
Yes, definitely. I think if there is an increase in interest rates, we could see a little bit of a dip in the commodity prices. And we have to wait to see if China, with that increase of interest rates, if they're still going to be purchasing as many commodities from emerging market commodity countries such as South Africa. So we have to see, but in the short term it will probably put a dampener on the price of commodities.
Well, in the meantime, we've had gold heading up to $1,375 an ounce. We've had the euro weakening below 130 against the dollar, and some, of course, calling for the euro to go down to 128 by the end of the year. The rand, although weaker, has been holding up pretty well at 715 in that case.
It has been holding up quite well. I mean, obviously, if you take a look at it from a few weeks ago, we are at 680, so it has weakened significantly since then. If we take a look at the bond flows into South Africa in November, they've actually been net sellers of bonds of about 7.8 billion from foreigners. So you just see that they are slowly taking money out of our bond market. And if you take a look at 7.8 billion outflow in bonds from foreigners, and the rand still at 715, it has still performed relatively well. So we are seeing that carry trade coming on through, people still looking for yield, although it looks like some of the bond players are starting to move out of the market.
Now, we had numbers out from Naspers this morning, that's 6-month numbers, and really at the top end of their predictions. We had core headline earnings per share growing by 33%, revenue up by 18%. That share price opened over 1% firmer this morning. It's also headed into the red as we go into the afternoon. What's the concern there?
Yes, well, I think very good numbers initially, right at the top of the range. I think the top of the range was 35%. They came in at 33%. So good numbers from Naspers. I think the China problem is why we came down initially. They had very good earnings coming in from Tencent, and with the increase in inflation in China and maybe a possible interest rate hike, people are thinking maybe that it'll be a bit more difficult to get that revenue out of Tencent. Also, the price of the internet company in Russia is very highly priced at the moment, so they made a lot of money from that. From that acquisition, and it's also the way they've treated the accounting on that Russian asset. So I think initially it looks like very good numbers, but if you dig down deeper, it's not as positive as it looks on the surface. So I think a very good set of numbers. Our target for the year is about 382 Rand It's trading 360, so there's another 5% upside on Naspers with what our analysts are looking for. So you're really at the top of the range, so not too much more to go for Naspers.
And of course, revenues from those internet businesses growing by 54%, so just showing you the power of Tencent and of Mail.ru, and I think it also has some internet businesses in Brazil. Is there a concern that those revenues could start to come off going into the future?
Yes, I think they've grown at such an extensive rate over the last year or two. I think it's probably getting to the top of how much they can expand. They're still going to bring in very good revenues, but it looks like maybe they're starting to get to reach a plateau. There's also other competitors coming into the market. On the advertising side, though, the Brazilian side looks very good. It grew 8 to 11%, and that's also print advertising as well. So the Brazilian market looking robust, and you'll probably find that they'll start to put a bit more money into the South American assets as well.
Now, one share that has bucked the trend today, that's Capital Shopping Centres, the London-listed group that was spun out of Liberty International. This share since last Thursday has just been on this rapid rise. I think we rose 8% on Thursday, 2% Friday, up yesterday, up another percent today. So continues to buck the trend, Rob.
Absolutely. I think actually one day before that they were down 5% after they said they were going to have an acquisition of a shopping centre in Manchester. And from then on, we got an acquisition saying that their foreign holder wants to buy the whole of them. And I think the market sees that as very positive. They were worried initially that the purchase in Manchester was going to put them under pressure. But now with another buyer coming on, they should have a lot of cash flow. And the asset that they were buying is very good, and the assets they've got is very good. So very good. I think that you probably see a little bit more upside as people rebalance their weighting for that corporate action. But also getting to the top of how much that share's moved over the last few days.
Anything else standing out today among the winners, Rob?
We take a look at SPAR's up about 1.5% today. SPAR's moving into the MSCI index, and because of that there has to be a reweighting, and so there should be a lot of buying coming in as they reweight SPAR into that index, which is very positive for SPAR. I think it's probably going to be about up to 200 million rands worth of stock that they'll need to purchase. So I think it'll be firm over the next day or two.